guys, hope you're having a brilliant day. Hope all is well. I hope you guys have had a fantastic weekend, and welcome to the YTK weekly recap. I want to go through the trades which I took last week, and the trades which I took was EURUSD longs, Aussie dollar longs, and I want to quickly go through the reasons why I took that specific trade and the technicalities that were surrounding it. And it's been a while since I've done a video, so I hope you guys enjoy. First and foremost, the reason why I took the long on Aussie dollar is due to structure of price. As you can see, we've seen with the order flow price, it's been heavily bearish, where you have a significant level of accumulation and distribution of price with the structural element of lower highs and lower lows. As you can see at the moment, price managed to raid liquidity lows of August's significant level of stops that were pending below the level of 0.6677. So price raided significant lows and also raided October's lows. So we've had two stops runs of price where we managed to see a expansion of the raided lows of September and also the lows of August. So my initial target was the previous month's high, which is price is currently rallying towards at the moment. If we mark out the monthly open on price, where he has 0.67494, I was hoping to get above that significant level. After price raided stops pending below this significant level, we can see that price could be able to reverse towards the upside. On a weekly, you can see that price managed to come in. This is the block which I wanted to get out on price, where it was around probably EQ of this significant block. The reason why I said EQ is because it was seen as a key level of brokerage support, now uses resistance. So this price zone of this significant key level, I was expecting price might have a bit of a rejection of that significant point of price. As you can see, we've also had a swing low fractal on the weekly where price raided these significant lows, where price created a low, a lower low, and then a swing in a push up in price into this key level of resistance, which eventually happened. As you can see, that price managed to accumulate, and I managed to take a loss on the previous week when I took a short within this significant price zone, and price managed to take me out. But what made my bias switch is when you look at the structure of price and seeing the lower highs and lower lows, price managed to accumulate, distributed amongst pushing and creating a higher high on price. So as you can see, price managed to have an aggressive move up with a strong candle close above significant liquidity highs above the 67,740 region. This was the last bearish candle which pushed price higher. As you can see, this is the last down candle which pushed price higher, which is a key level of bullish demand zone with that bullish order block on a daily. So what I was anticipating was price to come into the wick, the body, and 50% of the candle. So I put this last bearish candle push price higher. Price managed to raid stops and took out the previous day's low, where the stops were completely taken, come into a key level of demand. And as you can see the 0.674 to 430 region, price raided as significant lows. And when price managed to sweep the stops on a 4 hour, had a similar to an intraday liquidity stop run, I managed to look for longs immediately off this significant level on the H4. And that's when you can see my expansion candle managed to occur. I was hoping price would be able to get above this significant hourly breaker for me to know that the low is in. So as we found support of this hourly block over here, you can see that this was the key level for the optimal entry point, where price dips into that significant zone after the MS break on an hourly, retests the zone and expands to the upside. I managed to take profit around the 68500 region. So the reason why I chose that specific zone and price, it was considered as EQ of this significant daily level, and on the weekly, sorry. So that was the point in price where I was expecting price to have some sort of aggressive reaction. So price managed to dip into it and it managed to touch my take profit. I had 2 positions running from 0.68 for 300. And as you can see, let me take away this trend line. You can see where price reacted off this key demand zone, dipped into the zone, rated stops, dipped into a key level in price. When it all aligns from the HTF levels, you can see that price can be able to have some significant aggressive pullbacks and also aggressive reactions. So you always be patient waiting for your setup. This was the breaker setup and price expanding towards the upside. And Aussie dollar was a fantastic trade. I was happy to get my money back, considering the fact I took a loss on it the previous week. But like we were saying, minor setbacks, major comebacks. And I want to go on to now EURUSD. EURUSD was a similar type trade. As you can see with the structural price, we're actually very bearish. Where you can see price creating accumulation in price, creating a lower low, creating a lower high. Before the lower high was even created, we managed to sweep stops where price managed to take out the previous month's low. So we rated stops below September's low of 1.08850. So we rated stops towards that significant key level. I marked out the body of this significant candle of the 11600 level, because this is a monthly order block, so I was expecting a bit of a reaction off the significant level. Hence why I'm actually looking for shorts on EURUSD, just to find a correct entry point. But on a weekly, as you can see, actually I'm going to go down on a monthly, where you can see that the monthly open is 180964. So I was hoping for price to be able to be above that significant key level. On a weekly, you can see that we raided stops. We didn't break market structure to the downside, hence why I took a loss in it last week. So I should have waited for the weekly MS break rather than being a bit hasty and taking a daily instead. So we took out the stops of price, where we managed to take out these weekly lows of liquidity and neutralize them at 1.09260, and also the other level of 1.09270. We rated the stops of price and we created the swing low fractal. I have a low, a lower low, and then the swing towards the upside. In my ultimate rejection level, it's going to be the 11600 level. As you can see at the moment, we are actually rejecting that level, and I wanted to, for example, see where the opener price was of 1.1310,315. So let me mark out the daily. You can see after price last week, I was actually short from this significant level over here in the H4. I took my shorts from this H4 block, and price was heading towards the downside and eventually took me out for a 1R loss. And as you can see, price managed to respect structure. As considering with the order flow price, I thought the lower high was in, and price managed to actually find key support of this breaker over here. And also we had a double confluence with this being a break of this up candle prior to the down move, and also this down candle prior to a not move, where you have not only a daily break, but you also have a daily block, so you have a double confluence. Price managed to take out the previous day's stops, managed to sweep liquidity below the significant key level of 1.09620, and price expanded to the upside and took me out. So the way I switched buyers was looking at the daily, and then you can see that price managed to break market structure towards the upside on 2 key liquidity points, breaking above that and confirming the higher high of structure. So as you can see, the structure of price, where 1.10 price broke above that significant level. We rated it at first, and then we broke above that significant level, and this was the last bearish candle which pushed price higher. So I marked out the daily block. So this is the last bearish candle which pushed price higher. Price took stops again, raiding the significant liquidity low on price. So it took the stops at 1.10, 1.10130, and we came into the H4 level of price, and it came in once again sweeping liquidity below the H4 stops and came into a 4-hour breaker. This is where entry would have been. Straight off the H4 breaker, even on the hourly, we found key support of that zone of price. Barely any drawdown, with the stop just below about 20 pip target for 180 pip move, which is a nice 9% gain. So, and why would you go out at that significant level? Because this is where the, if I take out all the markings, this is where the 1.16 level, 1.1, the 1.11600 level is. And let's find the support of that daily block again. So I'm expecting further shorts on EU for it to distribute towards the downside. And that's why I marked out my take profit levels. So I hope this video is insightful. I hope this video is beneficial. I hope you enjoyed the weekly recap. I'm going to come with a lot more content in the near future. If you have any questions in regards to this style of trading, or you have any type of trade, even if you have any type of questions, regardless of what it is, just hit my DMs on YT on Young Trade King on Twitter, or Young Trade King on Instagram. So I look forward to hearing your questions. And if you want to join the mentorship, just hit me up with a message, and I'd love to be able to work with you. But hope you guys enjoy the videos, and many more to come soon.